Hey, good morning, everybody. This is Chihiro with Beyond Stocks. Happy Thursday to you all. We're super excited because we have somebody who's very experienced with venture capital, not only as a founder, but also as an investor. So, our guest today is James Wang with Mimosa Ventures. James, welcome to the show, man.
Hey, thanks so much. It's my pleasure to be here.
Yeah. We met at a event hosted by the North Texas Angels Group, with which you are involved on the executive board, right? Or
Actually,
advisory
not the
board.
executive board. I'm just a member.
Oh, okay. All right. In any case, you're involved with that phenomenal organization here in North Texas in the Dallas Fort Worth area. And so I heard a little bit about your background and I was like, you're really interesting. Will you be on our podcast? And thankfully you said yes.
Well, thanks for having me. This is fun.
Cool, cool. So yeah, tell our audience a little bit about your background. Like how did you end up where you are today as a VC investor?
Yeah, so I kind of had a roundabout journey. I actually studied biomedical engineering at Johns Hopkins and decided not to go the whole doctor researcher route. Got really lucky and got an internship at a hedge fund and was able to parlay that to a job at an investment bank. So I actually did energy equity research at Raymond James down in Houston for a while before leaving that and coming up to Dallas to join a fintech startup. So that startup was called Alerian, and what we did was indexing. So kind of like the Dow Jones or S&P 500, we had the benchmark index for the master limited partnership space. So I was the fourth employee there, director of data science, worked there for about a decade. We got up to around $20 billion in assets under management and then sold to private equity, who then rolled us up and then sold us to the Toronto Stock Exchange. And that closed just somewhat recently. So I actually
Got
didn't
it.
stay along for that entire time. I left after my retention period was over, essentially, and then joined another startup, which was a buddy of mine who was doing a tech startup, acting as essentially their CFO. So I worked there for a couple of years too, helped them through their Series A round of financing, and the new investors wanted me to come to the office 5 days a week, and I was just like, nah, I think I'm good. Good luck, guys. So left that, ended up having a couple of kids, got into angel investing, got into a lot of mentorship and like just roles in the community, trying to make the area where I live a little bit of a better place. Got involved with like UTD, SMU, that kind of snowballed into angel investing, which snowballed more into venture capital type work, which is what I do today.
Got it. One thing that I hear a lot of questions on from people is what's the difference between seed investing, Series A, B, C? A lot of people aren't familiar with that. Can you help people understand what that means or is?
Yeah, no, absolutely. So when you're investing in a startup, companies go through different stages of investments. Seed is generally the earliest. Sometimes you have CC pre-seed as well. And companies generally give up around like 15 to 20% of their company to their investors at each of these different stages. And if they do well, hit all the milestones that they promise, start collecting revenue, hopefully, then they'll go through another stage of investing in order to, supercharge their growth. So that's kind of what people mean by saying like going from C to Series A to Series B. They're hitting milestones, they're growing their businesses, and they need a little bit of extra capital in order to get to that next level. But getting extra capital is also a trade-off. You're also giving away chunks of your company. So one thing I always suggest to startups is to bootstrap it for as long as possible because you get to prove out growth. You get to have the leverage then when you go into those negotiations, and you're not giving away your company for pennies.
Yeah, yeah, absolutely. Thank you. That was a perfect explanation. Now, as a related to that, what exactly is angel investing then, relative to say investing into a venture capital fund?
Sure. Yeah. Angel investors tend to be, they're accredited investors, so they have some capital behind them, either through like a long career in a more traditional business or perhaps an exited founder. What angel investors will do, they'll look at very early stage companies that might only be an idea or might have just a little bit of revenue and they'll help those founders and supporters. So typically that's done through angel networks. Like the North Texas Angel Network is an organization I'm a part of. We see, maybe 4 pitches every month or so, and the individual members make the decision of whether or not they want to support that founder and if they think that that's a good business. If you're talking about more venture capital, that's a bit more institutionalized. The issue I have with angel investing is that if you only get 1 or 2 angels per meeting or per pitch, they're giving you like 5, 10, 20K, and you're using that as a founder to essentially just raise the next 5, 10, or 20K. And that's not helpful in a sense. Like, yes, money is great, but you want to give your founders the best chance to actually build something versus just constantly being in fundraising mode. So venture capital is a bit more institutionalized. There's more due diligence done. There's a bit more expertise in VCs and, well, at least hopefully in the sectors that they're investing in. And they also typically write bigger checks for a bigger chunk of your company as well. But the trade-off with that is you give up a little bit more of your company, but hopefully you get the resources of a strategic advisor who can help you build your company up as well and has contacts within the space to help you grow and scale.
That's one thing I was wondering about, which brings to mind a friend of mine, actually just a couple days ago. He has a very compelling consumer-facing product. I'll say it's in the apparel side of things. He's lifetime generated about 8 million in revenue. I don't know if they're cash flow positive or generating income, but they have serious proof of concept and some traction in the market. And he's trying to raise some capital. But what it got me wondering about is, does he have to raise that capital and dilute himself and his wife without getting any sort of like strategic insight or some sort of level up in the business? Because ideally for me, and I'm not a venture capital guy, I'm a PE guy, but ideally I would think if you're going to give up equity in your company, I'd hope you're partnering with somebody who's like, oh yeah, I've built this underwear brand into $400 million a year, right? And I'd want him to invest with that guy.
Yeah, no, absolutely. So I consider an investment kind of like a marriage. You're getting into a relationship with the founder, with a VC, and you want to make sure that it is a positive one that can grow with you. Too many people just kind of chase after valuation and just think, hey, like, they're giving me the most money, so why wouldn't I take this? Well, it really does come down to having a strategic investor, one that has expertise in your space, has been like, hey, I've done this before. I can help you get to XYZ, and I have the context that can get you there too. So it really is about having that relationship, having someone that you trust, having someone that you can grow with versus just taking the biggest check that comes your way. And that's different for every sector. I'm not really that familiar with like the consumer apparel sector, but I'm sure there are similar people in that space where if an investor sees a home run and sees the stats to back it up, then they'll be more than happy to help you.
Got it. So in other words, he wouldn't be too greedy in seeking a partner who can bring capital and expertise.
Exactly. That's something that I always encourage founders to look for. Like I said, it's a marriage, and that type of marriage requires trust and, both sides to bring something to the table more than just money.
Amazing insights. Thank you, James. So let's talk a little bit about like the VC ecosystem or industry, if you will. There's been a dearth of exits lately. I'm speculating that has to do with interest rates, but maybe you can provide insight on that. But with respect to that, or in light of the lack of exits lately, where are we kind of in the state of the market? What are some things that might change that moving forward?
Yeah, so recently the VC flywheel has kind of been broken. So around 2020, 2021, we had COVID and we had these insane valuations that were hitting early stage companies. I feel like it was like everyone was stuck at home and they were bored in options trading and like the markets just made no sense. That kind of happened in the VC world too. We had these early stage companies getting insane valuations, and when those valuations came down to earth, it became really hard to find exits to raise another round without it being a down round. So the VC flywheel kind of works by, hey, we're making these long-term early stage bets Eventually, 5 to 10 years later, these bets should come to fruition. That money kind of gets recycled back into the system after there's an IPO or an acquisition. Well, we haven't seen that many IPOs until just very recently. Like we had Figma and CoreWeave come out, but until just this year, it's been pretty dead in that market. So without that money kind of coming back through and recycling, we haven't seen new VCs getting funded at all. So it's like your Sequoias, your Andreessen Horowitzes, like these blue chip VCs have billions of dollars. They can invest in Series C, D, E deals, but at the very, very early stages, like at seed and Series A, VCs can't raise money. And if VCs can't raise money, then there's no money to give out to these startups either. I'm kind of in a unique position in that, like, I don't actually take any LPs. I am more like a family office, you could say. I invest off of my own balance sheets, and the companies I invest in are only ones where I feel like I have some expertise in or that I can add value to them in some way.
That comes right back to our previous discussion, which is you want to be a strategic partner, not just a capital partner.
Yeah, exactly.
Right. And if I were running a company, I would love to partner with somebody like you who can do that for me and help us level up. So okay, what do you think is the influence or market forces behind this lack of exits in the post 2021-22 era?
Yeah, I mean, a lot of it was just uncertainty. So a mentor of mine once told me uncertainty is the enemy of premium valuations, and that really, really is the case. If we don't know where tariffs are going, where interest rates are going in the next few years, then it's hard for companies to make these long-term decisions for like, hey, should we IPO right now? Where should we put our capital expenditures? Should we hire? It's with that uncertainty, it just shuts down the entire capital cycle. I think we're still in a very tenuous spot right now. If we see inflation tick up along with the Fed lowering interest rates, we could see ourselves in a stagflationary environment, and that would be very difficult to get out of. So I'm still very cautious when it comes to public markets. While that they have opened up a little bit with IPOs, it's still not quite where I would like it to be, despite the S&P being at record highs now.
Got it. And which underscores the point you made earlier, which is, I guess there's all the more reason to focus on bootstrapping your business, like just get to cash flow positive territory, right?
Yeah, it's like when you show that product market fit and when you show that you have a repeatable go-to-market cycle, then that makes it much easier for you to demand a higher valuation and pick and choose who you want to partner with versus going out and be like, hey, I have 2 months of runway left. I'm about to run out of money. Please give me money. You lose all leverage when you try to do that.
Yeah. Yeah. Very well said. All right. So another thing, another dynamic perhaps in venture capital is that the blue chips, Lightspeed or Andreessen Horowitz, they see the capital inflows, the lion's share of it. But is there like alpha to be had in other smaller players, maybe in the angel space? What do you think about that?
Yeah, I mean, there's an entire category of emerging VCs, and those are like maybe first time or second time VCs that have access to deal flow within their local markets, where they get to see things that these like giant and Jason Horowitzes don't get to see because it's just too small. When you have like billions of dollars to invest, if you invest a couple of million into a pre-seed startup, that's not really going to move the needle necessarily. You need to make bigger bets with bigger companies who have more potential for growth and hopefully are a little bit de-risked at those later stages. If you're an emergent VC and you have a $10 million fund, well, then that 1 million investment can make a much bigger difference in your overall outcome. And the thing with VC is that it is very much like the power law. It's one or two companies that you invest in make up the majority of your returns. When you're doing early stage investments, they're very, very high risk. And that's something that also like I don't think enough angel investors really fully comprehend. They're told this and they're like, oh yeah, I get it. It is high risk, but like 90% of your companies are going to fail. 10% will succeed in some way, and maybe 1% will give you that home run return where it actually makes it worth it at the end of the day. And it's as much getting lucky as it is getting good, because you can't predict where the market cycle is going to be, if we're going to go into recession, if interest rates are going to blow out or inflation blows out or something. Like, I seriously, I'd much rather be lucky than good.
Yeah, absolutely. You know, I love that you mentioned the Power Law. I have read that book by Sebastian Mallaby, which was very informative, and I highly recommend to those of you watching or listening. If you want an amazing history and primer into VC, please read that book, The Power Law by Sebastian Mallaby. He's a phenomenal like business writer.
Absolutely.
Okay, yeah. Um, so let's let's switch gears again. Like when I've been in any sort of a VC or tech oriented circle, like every other word spoken out of anybody's mouth is AI. And some people, like I can tell, it's this guy or this lady doesn't really know AI. Like it's just kind of a keyword that's being thrown into this discussion. And other people are very much technically at an extremely high level that frankly I can't keep up with respect to their understanding of AI. And maybe there's a bunch of people in the middle. So AI is unquestionably it is changing the world, but how is it changing the world? And furthermore, like, are there any limitations to it? Like, you know, I guess, how do you see AI really affecting the next few years, maybe medium term, several years, etc.?
Yeah, no, AI is changing the world. There's no doubt about that. I think people have unrealistic expectations of what AI and specifically large language models can do today. Um, if you think of what LLMs really are, they're just statistical models showing what the most likely next token might come in a phrase. And while that's really powerful and it can do a great job of mimicking human speech and discussion and language, it's not actually intelligent on the back end. There is no reasoning, whether, despite what ChatGPT tries to kind of tout as their latest advancements, that's not necessarily going to come up with new discoveries on its own. But it is a wonderful tool. And I think with any tool, you really need to understand how best to utilize it and what its limitations really are. So the people in the future who are going to really be able to take advantage of the AI revolution aren't the ones that are just like, hey, let's just like give everything to the AI and let it take over the world. They're going to be the ones who are very deliberate about how they use it, how they craft the prompts, how they engineer that, and understanding what AI can do, at least this current iteration of it can do, versus what it can't do. And there are very specific niches where I think it'll absolutely change the game. Personally, I invest in fintech and biotech, and we're seeing AI kind of explode in both of those areas right now.
What do you think, or are there any resources you can suggest that help uh, enlighten somebody like me, a novice, into like what is a great use for me on an everyday basis to use an LLM versus not?
Yeah, I mean, the best thing you can do is use it on a daily basis and experiment with it as much as possible. There are plenty of classes and tutorials out there to get the most out of your AI. Just the more you use it yourself, just like with learning anything, the more you do it, the more you learn, and the more you figure out what works and what doesn't. In the VC world, like, for example, like if we're looking at healthcare VC, look at the admin efficiency side. Like AI there is already kind of like a cheat code. Like the ratio there as well. It's something like there are 10 administrators per clinician in many systems. And that's not just hospitals. Think about like prior authorization, billing, charting, scheduling, compliance. All of that is a drag on margins, morale, and throughput. Like AI doesn't necessarily need FDA clearance to, cut a scheduling bottleneck or reduce denial rates on insurance claims. That stuff is like low-hanging fruit and very high ROI. And I would expect there to be a lot of like value unlocked there and fast too.
Yeah, across our portfolio, so we own and operate clinical healthcare facilities, brick and mortar, and one application that we've been leveraging is in terms of billing. Billing for healthcare services is like this super arcane, like needlessly complicated process. And so we have been leveraging AI in that respect. And I actually was talking to our COO just yesterday about some potentially other applications as well. This isn't just a healthcare thing, but
Mhm.
for example, replacing IVR with IVR systems when you call in and it gives you a phone tree, press one for this, press two for that. Like AI is absolutely going to be a billion times better than an IVR system. So that's another application that we're looking at right now.
Yeah, absolutely. And like AI in general, the way I see it, it's less about replacing people and more about scaling the ones we already have. The people who are great at their jobs and know what they're doing, allowing them to have more capacity to work through more quicker.
I do have one question. So there was a notable news event recently, and a few hours after that happenstance, maybe it was several hours after it was definitely confirmed that this event had happened, this current event, I was talking to my subscription to ChatGPT, and it said, "Oh, this isn't confirmed. This is just a rumor right now." And I thought that was strange. Like that's not exactly a hallucination. So, do you have any insight into what was going on there in the LLM that caused it to not be abreast of this current event?
Yeah, so LLMs, the way that they're trained is off of a data set that has a certain cutoff date. If you look at like ChatGPT and stuff, they can now search the internet to find the latest events. But if you're just asking them for like, hey, are these facts or are these rumors? Like they have no ability to necessarily determine if something is real or not based on something that's happening in real time. But if they were trained on a data set with like, encyclopedia, historic knowledge, they can say like, hey, World War II ended in 1945 or 46 or whatever it is, and that's a fact. But if it's something that is very, very recent, then they wouldn't have been trained on that data yet. So they wouldn't be able to tell you whether or not, like, hey, this is a rumor or this is truly true. They would be able to look at all of like the, most recent news articles perhaps and give you some approximation, but saying anything with certainty is difficult. So like if you think of how LLMs work, they're deterministic models, meaning that they have like a certain input should give you a consistent certain output every single time. But that output, in order to have a level of creativity and not be boring, they add a stochastic layer to it, which is just like an element of randomness. So like when you're trying to like create a new poem or something and you give it the same input each time, it'll give you a slightly different output because of that additional randomness added onto it. But that randomness also can add more hallucinations depending on what level that's set at. So like when I think of AI, there are general models. It's kind of like with like when you buy a new car, you expect it to just run, but some people like to like tweak things with it. They add like a turbocharger or whatnot, or they adjust like the, steering race, whatever it may be. Most people just want to work. With LLMs, it's the same way. Most people just want to work. So there's a very standard baseline of like the creativity or the level of detail answers may give you. But if you were to really get into it, you can tweak things like the temperature, which kind of governs how creative it can be. If you set it very low, it'll just give you the same answer and it'll be very dry every single time. If you set it really high, you can make it give you very creative, very, well-written answers that like, blow your mind, but it might be completely made up. So it's something that like, once you start playing with these models yourself, you can adjust these different settings, but that's not something that most people ever get into.
Got it. That brings up a question, which is when, say, I'm in a some sort of tech meetup or something, a networking event, and 98 out of those 100 people are saying, "Yeah, I'm working on this AI, that." How many of them are actually building a model versus like putting, like a window dressing on Chat GPT or some other LLM?
The vast majority of them are what I call chat GPT wrappers. They essentially have like a platform or something that already exists or that they are building, and they inject an LLM into it to like answer some basic questions. Now, there are infrastructure type plays that do things differently. Like they'll have their own like RAG pipeline. So RAG is just like a way to retrieve information and whatnot. And depending on how you design that on the back end, you can, reduce hallucinations by having a very specific set of like PDFs, documents, whatnot, a pool of knowledge that it pulls it from. So those things can be more useful, but the vast majority of these platforms are just wrappers to an existing LLM. And I'm not saying that doesn't have value. I think like, these general LLMs like ChatGPT are great, but they're in order to implement them well in an organization or an enterprise, what you really want is an easy user interface that gives you a very specific ability to do something, like whether it's like marketing or whether it's data analysis. They may use a lot of like the similar pipes and infrastructure in the back end, but if they present it in a way that the average layperson can understand the limitations of a LLM and what features that are really helpful for that particular job, that has value in itself. And I think we're seeing kind of like a land grab right now for that, where a bunch of companies are in like the legal world, for instance, are popping up with LLMs that help with drafting documents and whatnot, or like taking in cases and looking at prior things where they can reference that. There's a land grab to that, and eventually we'll see consolidation, but we're still at the early stages.
Got it. And in terms of the evolution of AI, at least to the extent that an expert like you can foresee it right now. So as I understand it, these LLMs are basically just ingesting the entire internet or as much of it as they can, and then statistically saying, right, the next probable word is this, so I'm going to publish it, and it gives you a response. And that adds value to me. However, do you think the next level of AI, whenever that comes, is just going to be better at doing that or faster at doing that? Or is it going to be a complete paradigm shift? And what I'm trying to understand is the reasoning part of it that you were mentioning earlier. It's not reasoning right now. It's a statistical model. What's like the next sea change when it comes to AI?
Yeah, no, there's a lot of research going into this right now, and the current LLM models are kind of reaching the end of their, I guess, the end of that particular pathway. It's really brute forcing, throwing as much compute as possible, as much data as possible at the model, and seeing does it get any smarter or not. And like, ChatGPT recently released their ChatGPT 5, and it's like, yeah, it's like marginally better, but we're starting to see diminishing returns. So there's a bunch of different areas of research that go into totally different directions. One is like neural symbolic AI, which is trying to figure out how to make the AI, how to train it in more of a way that mimics the human brain versus just looking at these statistical models. I'm not an expert in that, but I have seen a number of startups kind of pop up around there, and that I think is really interesting. The big thing to me, though, is that these giant AI companies, they haven't quite figured out the right business model for it yet, too. They're not typical SaaS companies. They're not making massive profits just by selling a monthly subscription. Where I see it going in the future is this combination of payments as well as AI. So instead of going to Amazon necessarily and searching for something yourself, maybe ChatGPT gives you a suggestion on what to buy. It says, hey, based off of what you've told me you need, this is the best thing for you, and then it makes that purchase automatically. It's skipping like the traditional payment rails like Visa and MasterCard and whatnot. So with like all of the new developments in crypto regulation in Washington, we have the Genius Act, we have market structure regulation coming through too. I think there's a massive opportunity to see this intersection of both AI and crypto, where we have cheaper, faster payments that these AI companies essentially not necessarily control, but are able to leverage instead of traditional financial rails.
Got it. Fascinating. Man, amazing conversation, James. Thank you so much. I learned a lot talking to you. Any final thoughts with respect to venture capital or AI or technology in general?
Yeah, I mean, I think we're at the cusp of something amazing. There's a lot of potential for the future, but there are also a lot of pitfalls too. There's a ton of unanswered questions out there, and that uncertainty. Like I said before, uncertainty is the enemy of premium valuations, but there's also opportunity there if you can get in early at the right places at the right time. But again, so much of that comes down to luck. All you can do is really get out there, look at as much as you can, do as much research as you can, and make a convicted bet one way or the other.
You know, before we go, I did think of another question, James.
Yeah.
Maybe you can answer it, which is, um, when, like, gosh, I lost my train of thought. Man, I'll have to email you. Sorry.
No worries.
Totally lost my train of thought. But yeah, well, incredible. Is there, if anybody wants to reach out to you, like, is there anything you'd like to provide to our listeners?
Yeah, so my fund is Mimosa Ventures. Our website is mimosa.vc. There's a contact form on there. If you have any questions, feel free to message me.
All right, amazing. I did think of my question, which
Yeah.
is like, so with, do you think there's any, what do you think the social effects of AI might be like? Is there is there any concern with respect to like social people becoming socially dependent on AI as a companion that doesn't exist in the physical world?
Yeah, actually, I think that is actually one of the biggest risks of AI into our society in general right now. AI will lead to the rise of fake people. Like the combination of AI and social media is very, very scary to me because essentially, like, AI is great at providing convincing arguments and writing very great prose. When you combine that with Twitter, Facebook, all these other platforms that give like a bullhorn to these, let's just say AI fake people, whoever essentially has the most money, who is able to control the most compute power, can essentially influence the direction of society by putting out their opinions out there and amplifying in one direction or not or another, and that's to me is very dangerous. I'm not exactly sure what the societal answer to that is. It's less of people being dependent on just developing relationships with AI. It's more of how does AI influence our world going forward, and how do we prevent like kind of like the fall of democracy if you want to get really apocalyptic about it, through a few very very wealthy individuals being able to influence all of society. And in a sense that's always been the case with media, but AI just takes that to like the nth level.
Yeah, yeah, definitely. There are guardrails that have yet to be figured out. Yeah. All right. Well, thank you so much, everybody. James Wang with Mimosa Ventures. Thank you so much for your insights and your expertise.
Hey, it was my pleasure. Thanks for having me.
All right.